All right, gang. Happy Thursday to you. Welcome back to the Tier 1 Trading New York live trading room. Hope you guys are having a great day. It's a Thursday that feels like a Friday. Feels like a Friday, feels like a holiday. We got some very slow markets today, not a lot of activity. So we'll probably have a quicker session today. But of course, as we spoke about yesterday, that opens the door to any type of Q&A, any type of discussion that you may want to have kind of outside of what's actually happening on the charts. But as always, we'll look through and see if anything is on the radar. Just some house cleaning. Tier 1 members, I did upload the wrong live room session yesterday by accident. I loaded up Tuesday's session again instead of the Wednesday session. I'm going to reload the correct session for yesterday's recording after we're done this live room. That way you can go back and review and get everything sorted out. I got a few emails of the traders that religiously watched the full replay saying, Akil, I need it. I need the Wednesday session. I said, sorry, sorry, I gotta find it and re-upload it. So I will get on that. So what I want to look at today is gold, right? This was a move we looked at yesterday. Cody was looking for a breakout of our range. We eventually got that. We got a rejection initially during our live session yesterday. Then we ended up breaking out to the upside. We are now in a situation where we have multiple advanced patterns, right? Multiple harmonic patterns setting up along with a shifting pattern. I thought this would be a cool little lesson because I think it was Tuesday. We spoke to a trader, one of the traders on TradingView chimed in and said, hey, I'm trying to trade these patterns, but I don't really know the rules. I think that was Tuesday. It could have been yesterday. All these days kind of run together. He said, I'm trying to trade these patterns, but I don't know the rules. And we walked through that whole process of, hey, before you can find something, you have to know what to look for. And before you know what to look for, you have to know the rules. Before you know the rules, you have to practice this. And this is a good example of how knowing the rules is going to make a massive difference or a big difference in what you're actually trading. So I'm going to do a little replay mode here and walk you through the scenario in which we had, right? So we're looking at gold here on the 4 hour, and this can be two separate legs in its own right, but we'll focus on the bigger one for today's purposes, right? You can look at this as being our initial impulse leg, our X to A. So that's going to be this swing high to this swing low, right? After we identify this X to A, we need to bring on our Fibonacci retracement tool. That way we know what Fibonacci level is hit on the retracement, because that's going to dictate what type of pattern that we're looking for. So we come up to this level and we have a 50% hit. So we know that if our B leg, that first retracement, hits the 50%, then we are on alert for what type of pattern. Again, this is the imagine yourself, and don't just imagine. If you're new, you should actually have this. There's no shame in having a checklist, right? Literally, when I first started trading, I had a printout. I had it not just of patterns, but my whole entire trading strategy. I had a printout, killed a lot of trees, wasted a lot of paper, right? I'm old school. I don't really like computer stuff. I had a printout, posted it in back of my computer. There's a picture circulating on the internet somewhere of this if you would like to see it. It was a really bad setup. It was like a limpy, cheap Walmart desk that like bowed and curved in the middle. There were two monitors. They were mismatched. It was just bad. It was like it was a weird carpet on the ground. But humble beginnings, right? Humble beginnings. Fast forward to now, and how many monitors do I have? I've got all of the monitors, all of them. Probably got one more coming in the mail right now. I got the little Amazon Prime Auto kind of thing where it's like every month it just shoots me a monitor. Yeah. That way it takes, I'm not technically buying them every month. They're just sending them to me, right? But I had the printout of my rules printed out in the background, and I would literally just follow it one by one and check it out, check it off, or cross it off. Say, okay, do we have this? Check. Do we have that? Check. Do we have this? So we know that if we hit a 50% Fibonacci retracement, we have a bat pattern. And walking forward here, we know that we have our retracement here. This is going to end up being our C leg for the bat pattern. So sorry, a little sticky. We know what we're doing in this situation. We know that we have our X, we have our A, we have our B, which I don't think I drew in. Let me do this one more time. Here we go. XAB. There we go. We have our C down here. We know that a bat pattern completes where? Yep, could be a cipher. That is correct. Could be a cipher. That is 100% correct. Yeah. We know that a bat pattern completes where? So where is our D completion? Because at this point, we're already projecting our D completion. Where is our kill box, our kill level? Where are we looking to get involved at? The 886, right? So the 886 is our D completion. And that zone technically goes all the way to the top of the X leg, which is right here. So this is the zone in which we are waiting for price action to get to, and then we're going to attack, pounce, get involved in prey, right? Whatever it may be. Man, off topic. I'll share this video later on YouTube. Aussie Canada trade I took yesterday. Oh, I don't know how many of you guys are in there with me or took it. Oh, one pipper, guys. One pipper. I want like 65 pips. And then it said, bye-bye. She leaned in for the kiss and then took it away from me. She walked towards me, eyeing me up like I was the one, moved me out the way, and started smooching on the guy behind me. Oh, it hurts. It hurts. It made for a good lesson, right? You guys love my misery makes for the great lessons. I'll share that later on YouTube today. But yeah, that was a tough one. Ooh, Laura knows. Laura, me and Laura we met at the bar later and just started drinking to get rid of the pain. This is called these are advanced pattern formations, harmonic patterns. This one specifically, I got a question on YouTube. This one specifically right now is a bat pattern, but we're going to talk about how it changes. But these are called advanced pattern formations. You'll hear them referred to as harmonic pattern formations, Fibonacci or ratio patterns, lots of different names for them. But that's what we're looking at here. Not Elliott wave, no. But I did do a good lesson on Elliott wave a few weeks ago. So we have a bat pattern, potential bat pattern. That's what we're eyeing up. We're looking for our completion point, right? So market moves on. We're all excited. We're waiting. We're sticking to our rules. We're not doing anything to sabotage ourselves, right? And then we have this happen. Okay, so we're moving up. And then we have this. Now, this is where understanding our rules comes in handy, because what this does is change these two moves right here. This changes the pattern. Yeah, harmonic patterns, Fibonacci patterns, ratio patterns, advanced patterns. They have different names, like many things out within the industry. We call them advanced patterns, but harmonic patterns is probably the most common name. We call them advanced because I trade them a little bit different than kind of some other people out there. But yeah, harmonic, advanced, ratio, Fibonacci. Yep, all the same. A staple in my trading. So anyway, so when this happens, this changes our pattern. Now, who can tell me why? Why does this change? What effect does this little choppy chop have? How can that little 3-bar move, honestly, those 3 bars, how can it change an entire pattern? Well, because of our ratio rules. Because we have this deeper C, the furthest retracement before that now has to be our B leg, right? So I'm going to do this in a different color. We have to switch, and now our newbie, right? Newbie trader. Our newbie is right here. Our new C comes down here. Let me just write this, our newbie. I'll just do B and I'll make it gold. I like gold, right? Our new B leg is here. Our new C leg ends up being down here. And now, because the 618 is hit with that initial retracement, instead of a 50%, what does this pattern, potential pattern, turn into? Is it still a bat? Can it be still a bat? No, right? Because our bat pattern rules require that the 618 is not touched. Now it becomes a Gartley pattern. And with a Gartley pattern, we're going to have a different completion point. Where the bat pattern, our zone was here, the Gartley pattern is going to overlap a little bit, and I'll just put it to the left of it. Our Gartley pattern our completion zone is going to be here, starting a little bit lower at the 786 and the 127 extension versus that 886. Now, to make things even, so I'll show you the difference between the two. I'll show you the Gartley pattern, and I'll show you one more thing that is there as well. So this is our Gartley, X to A to B, B to C, C to D, looking like that. There's one more thing that was in here as well. That's going to be a butterfly pattern. I don't personally trade butterfly patterns. It's funny because they're actually the pattern that I understand the most, that make the most sense to me. But due to kind of risk reward reasons and philosophy, I don't trade them. But this right here, X to A to B, B to C, C to D is actually a butterfly pattern. So we have two patterns in this same zone. So it's a cool little lesson on morphing patterns and understanding rules. And I thought it'd be a nice follow-up because we did talk about the other day where it's like, we had two traders. One was on TradingView saying, hey, I'm having trouble finding these things because I don't know the rules. And we had another trader on Instagram that reached out saying, hey, I only found like one pattern in the last like 10 years of back testing, but I also don't really know the rules of these patterns. And it's important that you understand the rules because if you don't, you may be trading something that doesn't actually exist, right? You could be looking at this as a bat and all of a sudden it can change to a Gartley. You could be looking at what you think is a cipher, but is not a cipher. We get into trouble with that all the time on TradingView because people will use the pattern tool instead of actually using their Fibonacci's. So they get an invalid C leg, but they don't know it's invalid because they don't know the rules, and they take an invalid D, then the pattern blows up in their face and they wonder why they lost, and they come back to me and I'm like, well, it was never a valid pattern in the first place. And they're like, oh, right. So it's important we know these rules because knowing the rules allows us to ensure that we pick the correct pattern, that we enter at the right location. Bobby says there are a lot of different variants to the rules too. Yeah. And again, and that goes to, and I think I did a podcast on this the other day. In general, in trading, well, I did a podcast on this. One of the most frustrating things as a newer trader is that there's no common terminology in trading. So actually, this was a YouTube video where I talked about, hey, some people will call a double top this. Some people will call a double top that. I'm not calling that a double top, but this person over there will. Some people will say this is a flag. That's not a flag, right? And if you're someone who's consistently bouncing around from YouTube video to YouTube video, from book to book, from coach to coach, it's very easy to get confused because one bit of knowledge told you one thing, and now another person is telling you another thing, and now you don't really know what's right and what's wrong, and then you can't really kind of, when you're going off into the markets and you're trying to find them, you're a little bit confused because you're not really sure if you're looking at the right thing or not, and it really hurts the learning curve. So, we spoke about this earlier. I think it was you, Bobby, who said find maybe two mentors. We spoke about once you get to a point in trading where you're serious about trading and maybe you've tried out a few people where you've read a few books or you've watched a few YouTube videos and you kind of found the one or two like coaches or mentors, educators, whatever you want to call us, that you're comfortable with. That means style of trading, style of teaching. I would eliminate everyone else, right? Stick to one or two, and hopefully they're kind of on the same page. When you really get serious, you want to go with one, and then you can always expand later to other people. But when you're really serious about learning, you want to stick with one to avoid that confusion. And then once you learn from that one, and once you've gotten to a point where you're knowledgeable about the market, you kind of have your own philosophy, then you can start branching out to others again because your philosophy is set. You're no longer as moldable. You kind of know what you know. And now you're going to other educators for different things. But kind of bouncing around all over the place is a struggle. I spoke to a guy the other day who was like, hey, Keo, I was watching your videos and I talked to this other guy and he said this. And what do you think about the way he's doing it? I'm like, I don't care. It's not me. I'm not here to poo-poo on anyone's style. I don't care. That's something you got to figure out on yourself. So nice little morphing pattern here. We're still in the kill zone for both our butterfly and our Gartley, right? So obviously if you're an aggressive trader, you're in already. If you're more conservative, right, this is the area where you're looking for your reason for entry. So perhaps you're going down to a lower time frame like the hourly, right? We have a little rising channel here, a little loss of momentum coming in the structure. Maybe you're looking for a specific entry reason to get involved. Again, that's going to go to just like patterns maybe have different rules depending on who you're learning from, right? You as a trader, you may have different rules for entry depending on how aggressive or conservative you are. So cool stuff. Let me get through the YouTube comments real quick and I'll let you guys go. Quick session today for the live stream. I got a question. What's your strategy name? And I know you're probably referring to this, and we talked about this already. In general, right? What I tell people when they ask, what is my trading strategy? I just say price action trader. Just say price action trader, right? I trade advanced pattern formations. I trade support and resistance. I trade trend continuation. I trade counter trend. I trade price. I trade price. Greetings to Q. Reader, learned so much from you guys. Jason Stapleton, my mentor, one of my mentors, Jason Stapleton and Todd Brown. Yeah, I had two as well. It was interesting talking about two mentors. I had two mentors in my trading career, Jason Stapleton and Todd Brown, who were a little bit different. Todd was they both loved price action. Todd was a little bit more mechanical. Jason was a little bit more discretionary. So it was cool to see how, both sides of the analysis fit in. And I learned a lot from both of them on the discretionary side, from the mechanical side. And they had one common theme between the two. What do you think that common theme was? Whether they were discretionary, meaning that a lot of stuff is up for interpretation. You have the ability to read impulse legs in the side, versus mechanical, where it's more black or white. What do you think the one common thing was? Bingo, Bobby. Yep. Rules-based. Rules-based. And it's cool because there's millions of ways to trade out there, guys. But what you'll see is if you put 100 professional traders in a room, you may get 90 different types of trading styles, right? You'd probably get 100 because each is going to be unique to that trader, but you'll get 90 different trading styles. But guess what? The backbone of how they trade, meaning like not philosophy on the market, but like the business side, is going to be exactly the same. The principles that all professional traders use, or most, they never want to say all because, there's always someone out there, right? But the principles that most professional traders follow is always the same. And that's treating your trading like a business. Risk management is key. Rules-based trading is key. Observation and review is key. Data collection is key. Obviously, trading psychology, no self-sabotage is key. Mind state is key, right? No matter what they're doing, all of that is key. So yeah, good stuff. All right, YouTubers, trading viewers, hope you guys have a great weekend. Hit that like button before you go. Leave me a comment if you have any questions below. I'll see you with, I'll load up that painful video of my loss a little bit later today. And I'll see you guys this weekend, probably Sunday, for a Trading Edge video. Live rumors. Is there any place in particular you wanted to start off